what do you call a sheep who can sing and dance? The answer was Lady Baba. Wasn't as well received as I was like, so we're going to try another one here. Why do melons have weddings? Because they cantaloupe. So any northerners here are going to appreciate that. Without further ado, I'd like to introduce the panelists. So we have Jaime, who's the CMO of Bitget. We have Joseph, who's BD lead at Swissborg. Riaz Mehta, co-founder and CEO of CryptoKnights. Ryan Miller from Decrypting. And Danylo from United.Network founder. Without further ado, let's give a round of applause, please.
Good afternoon, everyone. My name is Jaime. First and foremost, it's a pleasure and honor to be here today. Didn't appreciate the northern joke, but maybe we can recap it a little bit later on. We're going to get into it. I'd like everybody to just quickly introduce yourselves, because I think it's really important when you come to a conference like this. You get a little bit of an idea for exactly what they do on a day-to-day basis. So let's just give 30, 45 seconds max on what we do. Let's start on the very end, please.
Thank you, Jaime. So my name is Joseph. I'm the Europe BD lead at Swissborg. Swissborg is a European regulated DEX aggregator that acts as a bridge between the off-chain world and the on-chain world. So in short, we are a crypto investment platform.
Hi, my name is Danylo, Den for short. I'm a founder of United.Network. We do a hardware wallet in a form of a card, and we promote self-custody as a whole philosophy, where and how you should keep your money securely, but still accessible.
Hey, this is Riaz. I'm the creator of a TV show called CryptoKnights, and it's essentially the Web3 equivalent of Shark Tank. It's on Amazon Prime now in the UK, so you guys can watch it. The mission and vision behind that show is to bring crypto mainstream, and what we're going to talk about today is it's about how to educate the retail investors in getting into crypto, and that's exactly what the show does.
Hello, I'm Ryan Miller. I'm the founder and CEO of Decrypting, which is a Web3 affiliate layer service. So we're looking to redistribute wealth. We're probably going to be hated by quite a lot of KOLs and influencers, as we're looking to pull those affiliate links directly to Decrypting in the Decrypt token for the community to be able to power that and generate as much engagement within the crypto ecosystem as possible. And I'm also a KOL and influencer as well in my own right.
Yeah, I think we've got an unbelievable panel here. Some good friends. I'm looking forward to today's discussion. My name's Jaime. I'm the CMO at Bitget Wallet. It's a pleasure to introduce this subject to you. Now, the key question we're going to kick off with, can anybody build wealth? And what does it look like? Like, can my grandma pick up a phone, go and trade crypto, go and make hundreds of thousands of dollars, or is it just for the select few? Let's start on the end.
Well, the answer is obviously yes. It just depends on your risk profile and how much time you got. I would probably not suggest your grandma, to put all of its wealth into a fat coin, for instance. That's probably not a good idea. But I think the short answer is that crypto is an asset class that has properties, one of which is volatility. And so volatility and building wealth are not mutually exclusive. You just need to, based on your risk profile and the time you have, build your portfolio accordingly.
I think it also depends how much money your grandma will lose when she trades. And I guess the most important part is to educate yourself every day and to be honest with yourself, to be less greedy when you trade, and then you can build wealth eventually, but only when you understand that the sustainable wealth only can be built when you're keeping in mind why you are doing this and exactly how you are doing this, but not just rushing when there is a gold rush or meme coin rush or whatever it is.
The answer is yes. I think grandma can definitely make money. It also depends on how much she puts in. Will she make hundreds of thousands? This is not 2017, so probably not, not that easily. But I think there's a real opportunity for the retail investor to make real wealth in crypto. And it comes down to fundamentals. If they try and follow the hype and the different narratives, and they will more than likely lose. But if they get back to fundamentals, then I think they can definitely make a lot of money.
I think that's a key point with utility and not chasing the hype, not chasing the narratives. We know that certain narratives are going to do well. AI products, robotics, they're clearly, in the media quite a lot at the moment, and rightly so. They are going to be future technologies. But ultimately, chasing specific meme coins or, certain launches that are based on a lot of hype, as you've said, that, they can fly to hundreds of millions. They're not something that I would personally go anywhere near, because ultimately a lot of people lose. You usually have to be, very early into those sorts of trades, or usually insiders, which is a massive issue with the space as well. So, I think there has to be a lot around education and making sure that people are investing in the right sorts of products that are going to give them the opportunity. And, are they chasing 7 or 8% in terms of profits, or are they looking to chase, multiple X's that, in this space is quite dangerous at times? So that's my take.
Yeah, I mean, I think pretty much everybody mentioned the word volatility there and volatile markets, and probably access to those via products is critical. I'd love to get your opinions, like short, medium, and long term, around those products. Like, what do they look like? Like, what is for the best or the positive, edge of the space? Frankly, there's people, riding the train of hype, looking for that 100x, 1000x, whatever that kind of bullshit terminology is that people are trying to go out there and capture. But actually, there's real builders building products. What do they look like? Like, what beats this, and what really generates that feeling of wealth?
I think, so fundamentally, investment is a journey. I think since 2020, we have witnessed, especially here in Europe, a huge rise of the retail investor. People suddenly, for lots of different reasons, became really interested in becoming financially independent, because for lots of different reasons they said, okay, I can't fully trust the system, whatever that is. And so all those people had no prior experience. So obviously, I think like we all went through this process, buying the top, because we thought, like this is going to go 100x and so on. And then it crashed, like 2 weeks later. That's fine. It's part of the learning process. I don't think that's inherently an issue. If anything, if you, and even more so if you're young, right? If you put all of your savings into one token and it crashes, if you're 25 years old, it's completely fine. Even if you're 35 years old, it's completely fine. There's no, if you make mistakes, then you'll learn, and then you become a better investor. And I think we can see a lot of retail investors who joined 5 years ago are tremendously better investor now. And I think this is why a lot of people, they 5 years ago they invested in too many altcoins, then they rotated into blue chips and especially Bitcoin, and I'm pretty sure 100%, like the vast majority of them are in profit now. So I wouldn't be surprised if those that enter the space now, 5 years later, will be in profit.
But that's a timing thing, right? I'm going to push you on this one. Talk to me about the product. What is the product that makes this vision happen? I want to come back to you if that's all right.
When you say product, you mean? Like
the user flow. So like they come in, they make the trade. Not everybody's willing to sit for 4 or 5 years to be in profit. Like short term, medium term, what does that product look like? Of course, from an organizational point of view, that's one thing. But from people that are building within the space, like how do we positively educate people around that?
I mean, unfortunately, the majority of projects, will go to zero, and I don't think this will change anytime soon. The truth is that most of us investing in altcoins, it's like people investing in penny stock, right? We invest in the dreams of many entrepreneurs, and their project will most likely fail because historically that's what the stats, that's what the data says. I think there's no easy answer to that question, I think.
Yeah.
I think one of the biggest things for me is when we look at the layer zeros and the layer ones that are building, we're looking for projects that are creating tangible assets to the real world. We're looking for that connection between what we see in Web 2 and what retailers are actually engaging with as a product and how that can translate to Web 3. So, your real world assets, your stable coins, which is a huge narrative this year, and the yield that can be generated from that. I know in previous years we've had algorithmic yield, which has been up in the hundreds of percents, which just isn't sustainable. Whereas when we look at stablecoin yield and the equitable access that can actually generate on a global scale, they're the sorts of products that I look to that I think in 5 years' time, they could be absolutely huge. And there's a lot of value there that people can actually tap into from the real world that, you're not going to see. When we say 99% of projects fail, that is ultimately the reality, but we have to understand why they fail. And if you start to create a token that doesn't really have a circular economy, it doesn't have value add that, whether it's going to be in 3 months' time, 6 months' time, 12 months' time, or, potentially even further down the line where that sort of technology is going to come to the forefront at some point, then ultimately there's going to be challenges and people are going to, question whether or not it's got that longevity factor.
Yeah, sure. I concur. I think it's about real-world utility and real-world assets. And even for our show, when we're picking projects that are going to be on the series itself, we look for things that have a real-world relevance. So is my audience going to be able to watch this, get educated, and be able to engage with the product that's being featured? Because ultimately, it'll come down to the real utility. There's so much being built in crypto. There's probably over 1 million companies now, but there's very few that have real world utility. And ultimately, I believe that is the product that needs to be backed. And I think that's, if retail gets into those things, then that's where retail will make money as well.
I guess to answer that question, we need to dive into history a little bit. And the market is going through the evolution. When Ethereum appeared after Bitcoin, it has a goal to build something more robust, a little bit cheaper in terms of transaction, and also an easy layer for the developers to build on the top of Ethereum. Then we got another products who built and brought the evolution to the next and next level. We've seen Solana as a technology who brought a lot of retail market into crypto. So I guess right now we're seeing the layer of Web 2 meeting Web 3. So what is happening right now, I guess, the products can be the one who are bridging these two worlds together. But the next layer, as for me, is something that will make a blockchain technology invisible for the mass adoption users. When those people will never understand that this is blockchain under the hood, but it will be working, like for example, Swift is working in the bank system, but no one knows how it works. But those products who will build something like that, I guess they will get not even 100x, but even more.
I mean, let's talk about volatility one more time. And we talk about kind of like institutions coming in, real world assets. Arguably, these kind of sections within the ecosystem, they reduce volatility. But what we've seen is a hype around meme coins. I'd love to get your kind of thought process. Like, in terms of maturity of the markets and investors, day-to-day investors, whether that's newbies or your pro degen trader within the space, like, where are we at? Like, what does it look like? Start with you, Ryan.
Yeah, I actually think we're no closer to moving away from that at the moment. We've seen quite a lot of liquidity drained from a lot of meme coin launches. And I think you're always going to get that degen trader that's looking for that 100x. They're looking for that quick fix to be able to, make generational wealth that isn't going to be available in 5 or 10 years' time. And I think people are very conscious that even with this cycle, myself included, I expected that the bull run would have been pretty much done and dusted by this point. So, I've completely mistimed it, like probably most of you in the audience. And we're still waiting for that next 6 months, next 12 months. And nobody really knows what that looks like. But what we do know is that that opportunity is only going to be in a specific time period. And that makes people potentially want to make those more speculative trades to try to capture as much as they can before we know we're going to enter a bear market. And I think that's one of the biggest challenges at the moment. So as much as institutions coming in and regulations coming in, and we're seeing a lot more structure, we're seeing a lot more utility and value from that side of things, I think we're always going to have that speculative side until people can't just launch a token. We don't just have these undoxed founders that generate quite a lot of hype on social media, and people jump in and jump in and jump in. If somebody sees a chart pumping 1,000% and they've made money on it previously, then they're potentially going to do it again, and they'll just roll the dice. Until we have the regulation that stops that, or we have the products and services that, I've seen it with a couple of launch pads. Certain tokens have to graduate; they have to achieve certain milestones before they can actually be offered to a wider community. Then I think we're always going to see it, unless we have those safeguards in place.
So you top trumped October there, I think, is what you're trying to say. Okay, over to you.
I think sectors like meme keep the fun in crypto, and for those of us that have been in this space, we have seen lots of highs and lows. And from a retail investor point of view, they should always be looking to diversify the portfolio. So if they want to make that 100,000x return, then sure, they can go and invest in memes. But they can also go to a casino. It's kind of very similar, right? But so if I were a retail investor, I would basically be splitting my portfolio up into the blue chips and then probably allocate 5% into my memes and so forth, right, to diversify the risk.
I guess those two events happened almost simultaneously. So the meme coin rush and the fact when guys like BlackRock entered the crypto market, it was almost simultaneously. But I guess the biggest problem, as in my honest opinion, was meme coins, that retail thinks that you can invest in the projects that don't have product. And they don't analyze anymore. They just want to see access and gains and nothing more than what is inside, what is sustainable. But the whole current bull run, if it is still happening, the current bull run is kept by the institutionals. And the meme coin rush was just to bring more retail people, just to understand, give the whole concept. But the next step is to educate and give the tools. Okay, you've played with your meme coins enough, but here you can diversify. You can invest a little bit in ETFs, keep a little bit of meme coins, keep a little bit of Bitcoin, etc. But don't be greedy. Don't make the market to be rotten after the whole rush.
And can I just push you a little bit more on diversification? So when you talk about diversification, can you just break it down? Like, what would that look like within your portfolio? Like, what's your thought process around it?
I guess it will be the same as with the current traditional IPO market. Like, most of the funds should be in something less volatile, secure, like ETFs, pension funds, something like that. A little bit in more risky, but something as a product. Like, I invested, for example, in NVIDIA or something related to that because I understood that the whole market is going to AI and it will fuel the market. The same is here. You should analyze the protocols, the tech guys who is building something that will bring market to the next step. And just maybe 5-10% with something risky if you want to gamble with yourself. But be honest with yourself. Will you be sane after that? Because we had a lot of situations, even the recent flash crash that happened just a week or so ago, it happened, there were a lot of unfortunate situations with the people who lost a lot of money. Was it worth it? I don't think so. So diversification with less risky activity and just a little bit of volatile.
Just to piggyback on the maturity of the markets, I think there are clear signs that the industry as a whole is maturing. But at the same time, I think we ought to accept that the meme coin market is here to stay, and it doesn't mean that we're not learning our lessons and so on. No, it's just it's a new niche within this grand industry that is crypto. And I think that we can see now, after 15 years, we can see clear distinction within crypto. You have Bitcoins, digital gold. You have blue chips, L1s. That's the backbone of capital market. You have stable coins. You have meme coins. Like all those are sub industry within the industry that is crypto.
I'm going to move the subject on slightly around the openness of the crypto market. Now, I think it's fair to say if you trade the American or Chinese markets, you've probably been in a bit of a volatile situation in the last few weeks. We talk about tariffs. Now, it's interesting. Mr. Farage tomorrow is going to be speaking at the event. He's our UK version of Mr. Trump. Is there going to be a meme coin, or is he going to create some volatility? Who knows? But there's a serious point around this. You know, it seems when Trump or one of these senior decision makers within the world, they make a statement or they make a new policy, the markets react. Now, the wonderful thing about crypto is it's available 24/7. You know, we see the increased use of AI technologies, the way in which people just don't sleep anymore. I think I speak to many friends now that are I'm based in Dubai, are waking up at like 2, 3 o'clock in the morning, frankly, just to trade because they're scared about what Trump is going to put on Twitter. Times are changing. I'd love to know, from your perspective, with the readiness and openness of crypto, and real-world assets have been a great benefactor of this, how we can tackle it and how we can proactively use it to build that wealth. Let's start in the end.
Well, I think it depends on what sort of investor or trader you are. I think if you are a real investor, by definition, all of what you described is noise. So we've been speaking about fundamentals, you know. So like there are a few assets in crypto, you know, including Bitcoin, that, you know, if you have a 5 to 10 years horizon, it is probabilistically a safe investment. Now, if you are a trader, I think right now is a difficult market, and I think I see lots of people who are working full time in crypto. They all said that this is the hardest cycle that they ever been through. They are exhausted. And right now, after what happened 2 weeks ago with the Binance crash, last Friday, you know, we saw all of our favorite crypto, you know, losing, you know, 10-50% on average, you know, so the emotions are high. We have no idea where the market is heading. I'm on the side of, I'm still fundamentally bullish on this market. I think we are trending higher, but that's at this stage, you know, that like we should see what the market says to prove me wrong or not, but you know, we'll see.
I guess the two keywords here are discipline and education. It doesn't matter how long the market works. If it's 24/7, it will not make you more money. It gives you a possibility to trade whenever you want. It gives you a possibility to adapt to any geographical market you want to trade at, but it doesn't mean that you will be more rich or whatever it is. And I guess the recent events show us that either you're an educated crypto trader and you know what you do at the market, and it doesn't matter if the crypto exchange is open 24/7. You either trust the platform or you choose the platform to your preference, and you know what you're trading, why you are trading this asset, and why you chose Binance over OKX or over KuCoin, why you trust them. And it's the whole market now, it's built on the trust. It's still a Wild West. We're still building the trust of the platforms and the users and the retail and the institutionals. So we need to build sustainability in order to be better of 24/7 markets than the classical stock market.
I think it's different. If you're a trader, then yes, you will stay awake at 3 a.m. in the morning watching the market and see what happens. But if you're a true investor, then you look at it very differently, right? So you will use fairly traditional guardrails to say, okay, I'll put my stop losses here. If something happens overnight, then it happens. And I know what my entry and exit points are. So if you invest in crypto in a similar fashion that you would as a retail investor into traditional stock markets, and know what your entry and exit points are, then regardless of the wild swings, you're not going to end up in a situation where you get liquidated and everything, you lose everything, right? And also manage your leverage positions as well. But if you're a trader, then you're a professional, and the 24/7 market does benefit you in that sense.
Yeah, I think Danylo and Riaz have hit the nail on the head there. You know, trading is pretty much open to everybody to tap into, but education's key. Things like stop losses, take profit settings, making sure that they are put in place will allow you to sleep better and not be waking up at 3 in the morning and checking your phone. You know, we're at a point where somebody can put a tweet on social media, and this isn't even just crypto. You know, he can note that the US are going to start making their own cooking oil, and the actual stock market plummets $450 billion. Like, what world are we living in where that can happen? And I mean, it has to be said, 19 billion in liquidations from centralized exchanges is just absolutely crazy. If we look at things like FTX, 1.9 billion. So this liquidation of event was 10 times bigger than the FTX scandal. Like, that just should never happen in crypto, and I think there's a lot of answers that people need to come out and talk about. We need to be able to openly discuss what's happening on centralized exchanges for something like that to happen, because with the right guardrails in place, that should never happen. Like, yes, there's going to be liquidations, and that's ultimately part and parcel of perpetual trading, futures trading, but for it to be to the extent where 19 billion is liquidated, there's some massive questions that need answering there.
It's a lot of money, and it feels like the paper has gone over the cracks, let's just say it like that. I'd love somebody to pick up, and this is to anybody on the floor here, about automated trading. We see within the crypto space, AI agents are playing a great force for many people when it comes to trading. And, when we talk about TradFi, we talk about pension funds, we talk about a lot. This is examples of which they've used for a long period of time now, for years actually, when it comes to a traditional setting. I'd love to hear your thoughts on the AI sense when it comes to the Web3 world. Just one or two of you, before we move on.
I'm happy to jump into this first. I track AI quite closely. For those that understand AI swarms and agentic economies, there's a lot of AI agents now that actually talk to each other and work together to basically analyze market conditions. So it may be sentiment within the world, it may be different types of volumes that they're seeing on charts, it may be the chart patterns. And there's certain products that actually have circuit breakers in place, and they noticed the volatility before the 19 billion crash, and the AI agents actually removed themselves from all of the positions. So in terms of opportunities to invest in AI products that are potentially going to give you yield returns that are quite lucrative compared to the Web 2 products that are available, that sort of technology I think is going to play a huge part moving forward. And ultimately AI never gets tired. It can work 24/7. So if you're not one of these traders that really has plied their trade for years and understands how the crypto market works, it gives an opportunity for people to get involved and potentially earn more than they would in the real world without having those risks associated with it.
I do feel that AI agents are the future, even for retail investors, because I can imagine a world 3 to 5 years from now that you will basically tell the agent, this is my risk profile, etc., go and do it. And it will hedge in a way that you are protected, essentially, that a way that humans cannot do. So fundamentally, I believe that is the way forward. Are we there yet? I don't believe so. I think the tools are not quite mature enough.
Oh, that's a nice way to end the AI segment, I think, on that. Did you want to jump in? Or? Yeah, go.
So from the product point of view, I guess it won't be different for Web3 products or other niches that are trying to adopt AI. The main thing here is AI shouldn't be a gimmick, shouldn't be just another feature that you implement into your product, because either you make AI the core of your business that will solve some fundamental things in your business, in your product, or you don't integrate it at all. So you can use it as a tool for the daily usage we all use, like all the LLMs, etc. But if you want to implement AI really, and you already can do it, think twice and don't fool yourself and your customers that you know where AI is heading.
Yeah, I like that. I mean, being upfront, honest, transparent, that's everything the blockchain's about, right? It's fully visible. Okay, last question, let's get into it. Traditional finance, we know that, we've got a big competitor when it comes to building wealth in terms of public perception and, frankly, product offering. How do we become competitive? And I want to get your answer right now, as in today, and maybe in the next 5 years' time on the end.
I think as of today, we can see there was an inflection point, and you can see a merge between TradFi and Web3. I think it's very good for the space. I was actually impressed over the past few weeks here in London to see so many institutions expressing a genuine interest into Ethereum or Solana. So you can see institutions like JP Morgan saying, yes, we want to do stuff, we on the Ethereum blockchain. So that's amazing, that's a real testament of how far we've come. Now, I don't necessarily think we should see TradFi as as a competitor that will threaten, the entire space. I think fundamentally, we've built the tech, so I think customers will have a choice, and that's great. I think obviously the older generation will probably rely on their favorite traditional banks, but we can see that young generation tend to gravitate towards platforms like Bitget, Swissborg. You just need to see the rise of neobanks as well, like Monzo and Revolut, to see that young people gravitate towards fintech or startups that started to build those new apps and layers. So I'm not too worried about the future. I think we'll both benefit from each other.
I totally agree. The word competition means that there will be a winner, and there shouldn't be. We need to learn how to coexist. TradFi, we need to learn on mistakes of TradFi, and they need to adapt the technologies of Web3, and then there will be a great way for us to coexist together and to benefit all of us, the retail, institutional, who will use both TradFi and Web3 and blockchains.
If I look at it for today, then there's a massive divide between TradFi and Web3. But if I look at it 5 years hence, I see that the lines will blur. I don't think they'll be that different, that ultimately it'll all just be this. This is it, this is how we do business, this is how we do finance. And part of that evolution is going to be regulatory environments, having the guardrails in place so that the retail investor can actually feel safe within our world, so to speak.
I think the biggest thing for me is value proposition. Why doesn't traditional finance work? And when you've got the likes of UK bank accounts, you'll get a 0.5% saving account. Yeah, we've got 2% inflation, 3% inflation. So you're losing money every single year. If traditional finance was fair, I wouldn't mind putting £100,000 and getting 8 or 9% APY for the year, but I don't. So if they're going to want to compete with Web3, that's the type of level that they need to operate from. And I think there will be many winners. It's not just going to be one or the other. It's who offers the better services and the better returns, because people want to see value for their money. And that's ultimately what it comes down to for me.
Yeah, I think we'll get some closing thoughts from everyone. I'd just like to kind of summarize, do we embrace volatility? I think the answer was pretty much yes. We should embrace it. The markets are available 24/7. There are agents, AI agents in some instances. There's ability to go and educate yourself on multiple tools. There's products, there's services. But ultimately, it's down to the individual's risk appetite and how much they're prepared, short, medium, and long term, to not only risk on the table, but invest in themselves from an educational point of view with the resources that are out there. I think there's one point that I really wanted to touch on, and this is my closing thoughts. How do you perceive wealth? Wealth for people in different areas of the world is very different. Wealth can be access, and access to digital currencies, for some people, is the only access they've got to any form of finance. And the example of this would actually be my grandmother. I'm half Egyptian, half English, very proud of that. She can't get a physical bank account in Egypt, but she can get a crypto account. And this is not just on Bitget Wallet, on many other wallets or exchanges out there. She can register for the first time. She can now build wealth, whether that's wealth is $10, $500, $5,000. She can now earn within that. She can now spend it in real-world utility. And for me, that is wealth. That is the ability to have access of resource and value, and it's super exciting. I'd love to get your closing thoughts.
I think sometimes we tend to forget, what these industry roots are, and I think you very well put it. Obviously, here in the UK, in Europe, or like in the Western world, we just don't have the issues, that 80% of people on Earth actually have. I think wealth, by definition, is like happiness, to each their own. We all have different definition of what wealth is. For me, I'm a young dad, you know, I have a 1.5 years old daughter, you know, so I just want the best for her. So, you know, wealth for me will be to provide enough, you know, so that she can, you know, go to college and, you know, buy a first flat, maybe in London, if it's not too expensive, you know, but we'll see.
I guess Web3 and blockchain, they showed that unbanked people in the regions like Latin America, Africa, Asia, can give access to build wealth, even to get access to money at all. And the governments, if they're smart enough, they will embrace this opportunity and they will build on the top of this opportunity. Not the current existing banking system will interrupt and go into the Web3. There will be something on the top of the blockchains and people will use it and the governments will leverage for their own advantage. But anyway, everyone will be a winner here. Yeah.
I think we live in one of the most exciting times in hundreds of years. That this is when AI and blockchain technology come together and phenomenal amount of wealth can be created. And this wealth is not centralized to certain countries. It's available to everybody on the planet. And that's what blockchain does. And if utilized properly, then it'll change lives in ways that we cannot even imagine today.
Yeah, I think just to summarize that, equitable access to services. I think it's 1.7 billion people are either unbanked or debanked across the world. And there's also a lot of problems with inflation. Being able to access an application that allows you to put, you know, a specific country's currency into stable coins until that economy stabilizes, to then be able to trade it back and know that you basically haven't had your wealth completely ruined by whatever the governments are doing in that country, actually has quite a lot of value. And the main thing is as well that, you know, a lot of the things that we do in life, that they're usually free or quite cheap because they have to cater to the wider populations. So everybody wants to retire, everybody wants enough money to just not be able to think about what they're doing day to day. But ultimately, that equitable access and just accessibility to services on a global scale is what really we should be working towards.
Yeah, I love that. I just want to say a massive thank you to everybody on today's panel. Wonderful insights, personal sharing as well. Thank you very much, and thank you everyone for listening in.